So there's a tremendous divergence between two of the most important monetary authorities in the world. The US Federal Reserve and the European Central Bank are really in divergent paths. What does Janet Yellen think? She keeps hinting of a rate rise in the Federal Reserve's December 14 to 15 meeting. The European Central Bank, on the other hand, led by Mario Draghi, has hinted at further quantitative easing as soon as today. And many people believe that this weekend, or rather the remaining of the 2 days of this week, Thursday and Friday, are going to dictate the course of events for the whole year of 2016. I don't think so. This is just a method to create sensation all the time. If after today you will find that after a few weeks there'll be some other week where they will find some other sensational news. There's no need to keep investors on the edge all the time. Do not forget, and this is why people lose money. Investors have to invest in businesses, okay, which have a long-term potential. Just because Mario Draghi is going to uh, initiate another round of quantitative easing is not going to make or break any business. I mean, how the hell, are you going to be sitting in one part of the world, and just because ECB further enhances its quantitative easing, does it impact your product? The product life cycle, the product characteristics, the marketing of the product, how does that get so very much impacted that it turns out to be a make or break situation? Similarly, Janet Yellen could be raising interest rates. That's what most people believe. But would that small increase of 25 basis points have such a dramatic impact on your business in any part of the world as to change the parameters, to change the foundations of your business? I do not think that is really the case. Businesses are built on sound foundations. Just a small tinkering here and there cannot have such a dramatic impact. However, the capital markets may take it otherwise. So you may have a lot of movement of stock markets taking place just in consonance with these decisions. At the same time, these two are moving parts. Mario Draghi may increase the quantitative easing of the European Central Bank, and it is also likely that Janet Yellen may raise rates tomorrow. However, these are also dependent on various factors. For example, it is very obvious that the US jobs report is still due tomorrow. Any sign of weakness in the US labor market will indicate that the Fed would be in no hurry to raise interest rates anytime soon, because they do realize that there is a lot of disinflation in the world. Okay? Oil prices have been plummeting dramatically. This has been causing disinflation in many parts of the world, and you do not raise interest rates when inflation is falling. This is not only the case in the developed world, but also in the case in the emerging markets, where the effects of a falling oil are clearly visible. And a lot of policymakers are adapting their policies in tune with these falling oil prices. In such a scenario, it is also likely that Jan Yellen may not do anything in its Federal Reserve Open Committee Market meeting, or the FOMC meeting as they popularly call themselves, on December 14, 15, and may want to stay put. Most of the rise in the developed market, stock market indices, like the Dow Jones Industrial Average and the London FTSE, has been predicated on the fact that Janet Yellen may raise interest rates finally, or signal the rise of the interest rate regime. Now, if that does not happen, then most of these markets could be really in for a good fall. And I would advise investors to take this into cognizance before making their further investment decisions. So, in short, there is an event risk, as I would describe, based on the US jobs report tomorrow. And investors need to be cognizant and stay away from the markets. I think there is some chance that Janet Yellen may not move interest rates at all. Mine may be a contrarian way of thinking, but I believe this is probably what is in our mind. Thanks. Take care.